Hey everybody, what's going on? This is Adam Mesh, and we have a great event for you today. I'm psyched about it because, as you know, when you think about trading and the stock market in general, one of the first names that always comes to mind, it's a signature name for success. It's Investors Business Daily. They've been around forever, and I know so many great traders that swear by them. So it was a huge opportunity, and I was excited to put on an event for them. And they have their MarketSmith team here to demonstrate what's been working for them. It's the trade like a pro mentality. MarketSmith is a comprehensive stock research platform that gives you data, analysis tools, and support you need to make smarter, more profitable investing decisions. So I'm psyched to hear this presentation. I think you're going to benefit a lot, and it's my pleasure to bring you quality presentations like this. So guys, take it away, and I hope everyone really enjoys it.
Good afternoon. Thank you, Adam. My name is Jonathan Howard. I'm the host today, and I'm here today, we're all here today to talk about 3 steps to catch big winners. Now, on the MarketSmith side, we brought in 2 of our experts, Mr. Arusha Piris and Mr. Scott St. Clair. Good afternoon, gentlemen.
Good afternoon.
Hello, John.
They are both product coaches for MarketSmith. And here's our agenda. Here's what we're going to talk about today. The 3 steps. Number 1, generating ideas. Obviously, in order to find a winning stock, we've got to look through a lot of ideas and find the right one. To find the right one, we go to step 2 and analyze those ideas. And number 3, probably the most important part, is timing your buys and sells correctly. And we're going to talk today about how to get that done. We'll also do a case study of probably, arguably, the best stock of 2016, NVIDIA, and then we'll end with some Q&A. So let's get started. Arusha, why are we here today?
Well, thanks, Jonathan. Well, it's quite simple. If you look at this chart right here, NVIDIA, this is the exact reason why we're here today. We want to capture the next great stock, and that's what we've been doing and studying for years and years here at Investors Business Daily and MarketSmith. We're always trying to figure out what the next best stock is or what has the potential to do something like this. So NVIDIA up 260% in only 45 weeks.
All right, so now we see what we're looking for. Let's talk about the 3 simple steps and how to get there. So step 1 is generating ideas.
Yeah, so generating ideas is critical part of any investment routine. You need to have a consistent source of ideas, because not only it's going to help you have a chance to get into some of these stocks with huge potential, but it's also going to give you a feel for the market. And so we made it really easy here with MarketSmith. Here are just 8 of the idea generation tools that we have. The William O'Neill screen, the breaking out today list, breakaway gaps, earnings gaps, near pivot when stocks are actually setting up, when stocks are getting stronger, we use the RS line new high screen, pull back to the 10-week line when stocks are pulling back to where it gives us an add-on point, and then finally the growth to 50. Now, we're going to go through each of these screens and show you results of them too. So here's the William O'Neill screen.
Now, who's William O'Neill?
William O'Neill is the founder of Investors Business Daily, and he's been a successful investor for over 50 years in the market. He's looking for growth stocks. He's looking for stocks just like NVIDIA. And he's studied so many stocks where he really broke the whole strategy down to science. Now, I know a lot of you on the call, you are hopefully are familiar, or you've somehow been influenced by William O'Neill, the How to Make Money in Stocks book, and he's also the founder of both Investors Business Daily and MarketSmith. So we're taking a strategy looking for stocks with both great technicals and fundamentals. Okay, we're putting the best of both worlds together to find these stocks that have huge potential, because a lot of times it's not the chart, it's they're doing something very special. They come out with a great product, and that's reflected in huge earnings and sales. So we've developed a screen looking for ideas like this. So here's one specific idea that came out in middle of January, Adobe Systems. This is a name that it's been around for a long time too. Large cap tech stock, and it went into the blue area there. Now this is pattern recognition that you're seeing on the chart right here, those horizontal lines, and the dotted line shows you where we enter into the stock. We're going to talk more about pattern recognition in detail a little bit later, but through this William O'Neill screen, Adobe Systems came, it gave you a chance to analyze the stock, and when you jumped out a little bit further, it went up 18% in just a short amount of time here. But here's the key. Take a look at the stock right here. This is exactly what we expect when you're in a good market. Okay, a company that's doing some great things, that they have some good fundamentals, when they start emerging out of these spaces, we expect this type of action.
And that's one thing, Arisha, you mentioned that is important, especially in our analysis, is the earnings. So you can see across the bottom of the chart the last 4 quarters of earnings, so 48, 39, 45, 42, and earnings are often a catalyst for stocks to move. So the William O'Neill screen, if you're not really familiar with him, he's taking, history, what worked on Wall Street for the last 100 years. We've studied stocks going back 100 years. And what are the characteristics of these big winning stocks? So the price action, the technical aspect is important, but also the fundamentals. So all the stocks that show up in the screen have earnings last quarter up at least 20% or more. They have quarterly sales, so they have some qualities as a company, which is important too.
Exactly. If you look along the bottom of this chart right here, you have the EPS of 42%.
Yeah. So I went through that, and this is a backdated chart, so you won't see some of the other fundamental data that we have, like return on equity and stuff that we'll get into later when we show the whole chart. But all that information to help you make a fundamental decision is available as well. All right, so I think the next will be the breaking out today list. So this is a purely technical list. It's looking for stocks that are breaking out. Every day when the market's open, it's scanning our database for stocks that are coming out of one of the patterns that the algorithm recognizes. And we'll get into what patterns it's looking for, but as a general rule, we're looking for stocks that have gone sideways for at least 5 to 7 weeks and then are emerging from those bases, and the breaking out today list will alert you to that. So it'll do that in a couple of ways, but let's see an example. So here's Shopify, and you can see early this year, the stock emerged from this flat base and made a new high, and you would have been alerted to that stock. So if you weren't aware of Shopify, like I wasn't at the time in January of this year, here's an idea. Oh, Shopify coming out of this space. I wonder if I should do more work on it. Look and see what kind of company is it? What are the earnings and sales like? What's the group like, et cetera. So at its core, Mark Smith is just a fantastic idea generator. So we push the idea to you and then allow you to get more granular to decide, is this something for my portfolio?
And the reality is with these 8 screens that we're going through, 8 lists that we're looking at here, you're going to capture most of the great stocks of that year. They're going to come through one of those lists.
And then this is the end result after breaking out in this stock. This is the backdated chart from the earlier in the year. But the stock's much higher now. But you can see the potential that we're looking for. In our world, we're trying to risk $1 to make $3 in essence, right? And if you do that and you do use proper money management, you don't even have to be right half the time to make progress, right? So if you're risking $1 to make $3 and you're buying these quality stocks emerging from bases, and it just comes down to, staying the course, following the rules, and doing that over and over to make progress.
Now, the breakaway gap list. Now, essentially what this list is, the goal of this list is to search for stocks that have an even more powerful breakout. We just took a look at stocks that are just breaking out past the pivot. The reality is some of the greatest stocks, they're not going to make it easy to get into the stock. And in fact, they're going to actually gap up while crossing the pivot, or they're gap up as they're crossing it, right? So let's take a look at an example here. Here's National Beverage. So how many, now probably people have heard about this at this point because it's gone on this great run, but back when it started going, how many people had this stock on your radar, right? But it came through our breakaway gap list. And so quite simply, if you look just below that, the current day's bar right there, there's a little gap right there. So the day before it closed at 60 and it opened up around 61, 62. So there's a tiny little gap there. So a lot of times they're much bigger than this, like that type of gap. But it also crossed the pivot at this point. And so it came through our list. Take a look at this stock. And if you look at the lower right-hand side, it says breakaway gap, 10.2%, 380% volume. So we're not only looking just for breakouts, we're looking for the most powerful breakouts. And when you see huge volume like that, and with a stock like this emerging out of it, and if it has a good story and fundamentals, and now you're in a good trending market like we've been for the last, 4 or 5 months, this is the type of results you expect.
Let me go back to the volume percent change. We said 380%. That's something unique to IBD. Can you explain that to us, please?
Yeah, so 380%, what we're doing here is we're comparing the current day's volume. And so if you look at the bottom, you can first of all just see how that volume is sticking far above the others, but we're comparing that volume versus the average volume over the last 50 days. Okay, and that line running through the volume bars, that's actually the 50-day average volume. So it's much higher than that. Okay, so what was going on here was institutions were falling over themselves to grab shares of the stock. Now, I think this was also an earnings reaction, so new information came out, right? So all of a sudden they realized that business was pretty good for this group and business might be getting better, so they started buying more and more shares. And so this is the type of result that we expect, 31% in 19 days, okay? And I'm not sure where it is right now. This is back from a couple of months ago, but I still think it's doing pretty well. But how many stocks produce 31% in 19 days? In the end, the things that you can control are looking at the right ideas and being there at the right time. After that, it's up to the market, right? And so some of these stocks, if you like them and you try it at this point, they're going to do this if you're in the right market.
All right, so the earnings gap list is kind of the same concept. We're looking for stocks that are gapping up on earnings, all right? And so earnings, especially nowadays, are a huge catalyst and can lead to big moves. So we want to be alert to, unusual price activity in the stock as a result of an earnings release. So let's see an example, Jonathan. This is Heska, and you can see in that first arrow where the stock gapped up and was gapping up on the earnings.
And Scott, let me interrupt you there for 1 second. That first one was 125% on earnings. That was also a breakaway gap. So it came through 2 lists there, earnings gap and breakaway gap, and also maybe even the breaking out today list.
Yeah, so there can be double prints, obviously,
right.
If there's an earnings and a gap. And it's all designed to make sure that a potential idea doesn't get past you. Not how you handle the stock and whether you take the trade idea, that's entirely up to you. And all of you out there might have different styles and different portfolio makeups and different, risk tolerance. But we want to be able to make sure, hey, this was an idea you saw. It's up to you to go ahead and decide to pass or continue. So the earnings up 125% at that time, stock gaps up. You even had, again, another gap later on when the earnings were up 64% and the stock gapped into new high there from 80 to 88. And that one, there isn't a base there. So that's one thing about the earnings gap list. It's whether the stock is sticking straight up in the air or down in the doldrums and then gapping up. If it gaps up on earnings, it fits the parameters, the stock will show up in your list.
Okay, so let's talk about the near pivot list. Now, in the end, it's always nice to see when stocks are breaking out and learning about breakouts and all that stuff. But where you're going to get better, where you're going to start getting an edge on the market is when you start to see stocks building bases, okay? Because now it gives you time to actually prepare for that breakout, right? You can do the research on the company. You can figure out how many shares you want to buy and exactly at what price you want to buy. So now when the stock breaks out, or if it breaks out, you know exactly what to do. There's no hesitation. So this near pivot list, this is one of our most powerful lists because it just prepares you for that next couple of weeks. So let's go to an example here. And so here's IPG Photonics. And so this is where you want to start investigating stocks, okay? This stock's in a nice uptrend, and now it's forming a beautiful flat base, okay? And it's just been going sideways. So just think about this. It's gone from $95 up to $124. And so it's a great profit at that point, but no one wants to sell. And so the stock just kind of goes sideways, and you start seeing the pattern recognition pick up a flat base. The 50-day line is actually catching up to it too. And so at this point, it hasn't broken out, right? You don't have to make a decision at this time whether to buy or sell, but you get to do the preparation. You get to take a look at their earnings, their sales, read up on their story, and try to figure out ahead of time whether this is a big story and whether it's worth taking that risk.
All right, so the RS line new high list is a very good list, especially in a market correction. Because what our relative strength line is comparing is the stock's price action versus the S&P 500. So if you're not familiar with our relative strength in-house, we have a couple of ratings, and it's not RSI, which is a common one. Everyone talks about RSI, which is kind of like an overbought, oversold indicator. Our relative strength is relative. In this case, the line relative to the S&P 500, how strong is the stock? So let's see an example. And we're going to go with NVIDIA here. So relative to the market, you can see the S&P across the top. It's not drawn to scale, but the S&P, while NVIDIA goes sideways, I would guess that's probably around a 5 to 8% correction, something like that. And NVIDIA did correct at first, which is common, right? Even the best stocks will go down in a bad market. Eventually, as the market starts to recover or even stops going down, the institutions kind of get anxious. They start driving up that best merchandise because it's not going down anymore. They're unable to buy the stock. And in this case, NVIDIA did just that. So in that time frame, while the S&P corrected roughly 5 to 8%, NVIDIA is in essence unchanged. And so relative to the market, very strong. To the naked eye, the stock's gone nowhere, right? And that's what's so powerful about that relative strength. We'll also provide you, if the stock is in a base, the blue dot, which is great. Very easy to see. You can see the highlight. NVIDIA's relative strength line is in new high ground as the stock is in a base or breaking out of that base. Very powerful indicator. So if we advance the stock, or we don't have the result.
Well, we already know. It went up 260%.
NVIDIA, yeah. We'll go over it later, though.
Exactly. We're going to go step by step through NVIDIA a little bit later. And this was one of the first clues that we saw that got NVIDIA on our radar way back when, right? Well before that 240% run. So let's go into the pullback, the 10-week line. Now, I know there are a lot of traders out there listening to this call, and not every trader wants to buy the breakouts, and that's totally fine. And so what we developed is a pullback to the 10-week line. And so this is still sticking with our methodology for looking for stocks that are in nice uptrends. But so it's not just a moving average list, okay? We're not running a screen looking for stocks near the 10-week line. What we did was we took the pattern recognition, and so we're looking for stocks that have broken out. They've been trending up for a little bit, and now it's their first time pulling back the 10-week line. Okay, so in-house, this is almost a must-buy for the stocks that we are really optimistic about, these great growth stocks. If those great growth stocks come back in that first time, you want to start buying there, right? Hopefully you have an original position, you're adding to your position. Okay, so this list is a great list for those who love pullbacks. So now if we go to the idea right here, here's Primerica. It went on a really nice run over the last year. And so take a look at this. It broke out of a couple of handles. If you look at that 24% flag, look a little bit before it, you can see that powerful breakout there. This was actually as a result of earnings. This might have been a breakaway gap too. And it went up 24%, and then it just went sideways. And where the arrow is, that's when it came up on our list. So if you don't want to buy the breakout, which is totally fine, it was such a massive breakout that a lot of people don't want to buy that extended, comes back to the 10-week line where the arrow is. Now here is a lower risk entry point because we know if it comes to that 10-week line, it needs to hold here. If it doesn't, then you know to get out of the stock. But it came back there, ended up forming a flat base, breaks out of that, and then comes back again. So a lot of the best stocks in a good market, they'll just keep bouncing off this 10-week line. So the first time it hits that 10-week line, you're going to see this appear on this list.
And now here's our proprietary list called the Growth 250. The Growth 250 was designed by portfolio managers here in-house. If you're unfamiliar with William O'Neill & Company, we basically practice what we preach. So we have skin in the game. We're in there managing our own accounts as well as some company money for some guys. And we use these tools. So we need ideas, all right? We're looking for stock ideas. So the Growth 250 was designed in-house by a couple of the portfolio managers. Basically asked them, what are the screens you're using? What are you looking to use to find stock ideas? So stocks in great groups, stocks with good relative strength, stocks with good technical patterns, et cetera, et cetera. There are 30 of these screens, and we bring it down to a manageable level of about 250 ideas. So there it is. We have our database, which is the institutional database of 7,500 stocks and ETFs. It's about 5,000 stocks. We run those 30 screens. We narrow it down to roughly 250. We give it a little bit of room to breathe. If there's more ideas, we'll let it expand a little bit. If there's less, we'll let it contract. But we're really our target, and most of the time, it's around 250, the number of names.
Okay, so let's go over how we find these reports. So when we're at the marketing chart, it's really easy. If you look at the top right-hand side, there's a stock ideas button there. When you click on this button, a little window is going to appear, and the first one's right there, Marcus Smith Growth 250. You know, click on View, and the bottom panel is going to open up. Okay, and here's the list. Okay, so it's really, really easy. You just have to click on that button, double-click on the first stock in the list, hit the space bar, and you're just going through stock after stock, and all these stocks are showing some kind of potential that the previous winners have shown in the past.
And one thing that's important, I think, Arusha, is in this case, I don't know how old this list is, but applied materials is number one. So we're not saying this is the number one idea, right? It's just we sort the list by group strength. We want to sort the list somehow, some way to create some kind of order of strength, but there could be a very good idea at number 20, at number 220. Sure. So we start with the best groups and work our way down. So I think it's important, you know, to kind of grind out the list as best you can, spending a little bit of time on each name until you come across something that's compelling to you, whether it's fundamentally or technically.
Well, I mean, it's funny here, Scott. I mean, those first two stocks right there, Applied Materials and Lam Research, they're quite a bit higher from where we took it.
Yeah, look at the price, even the current price on the AMAT at 38.80. I think it's around 40.
40 or around there, yeah. It's probably 45 or something, but yeah. So that's another kind of nice example right there. The best stocks, they just keep filtering up through the Growth 250, through all of these lists, and so you're not going to miss. Yeah, you're going to pretty much catch all of the great stocks if you're just paying attention and you know how to manage them.
Well, you say you're going to catch all of them. You're going to be alerted to them. Yeah. You're going to be aware of them. Right. But, you know, based on my experience being human, unfortunately, I'm going to miss some of them.
Well, you might miss them, and even if you get into them, as we all know, and those of you who have been doing this for quite a while, it's not necessarily, buying's the easy part, and really getting into some of the best stocks is pretty easy. It's managing them.
Yeah, so finding the ideas, yeah, I tell everybody to go on the road and speak to large groups and tell, look, we're going to make sure that you're aware. If XYZ goes from 50 to 200 this year, you're going to know about XYZ. Right. Now, how you handle it is up to you, and that's the important part. But we definitely don't want to get that first part right. Step one is being aware of the idea.
So we have our great ideas. Our step two now is analyzing these ideas using our weekly chart, our proprietary weekly chart. So we're going to walk you through that and show you how powerful it is.
So our chart is really, I just love our chart. I've been using our charts for 20 years, started out as a stockbroker and a customer using these charts. And I like to say there are nobody has a monopoly out there on a price chart. So you can get a chart of XYZ anywhere, all over the internet. But what you'll find if you've never seen one of our charts, what makes ours so unique is the combination of the fundamentals and technicals overlaid. And it's just such a great time saver. Once you get comfortable with using our charts, short of knowing the story of the stock, there's nowhere else you need to go to make a decision. All the data points that are relevant are going to be in that stock chart that we show you. So here's a weekly chart of Facebook, and you've got, you know, price and volume obviously on the weekly basis. The S&P line across the top is kind of a gauge, your relative strength line, et cetera, et cetera. But again, on the left-hand side, we'll go to the fundamental, what we call our proprietary data block. So we've got annual earnings and the annual estimates. Very important in our analysis. Is the company making money, right? Earnings are important in the long run to why stocks move. In the short run, they move on a lot of noise and everything going on throughout the world. In the long run, it's earnings that drive these stock prices. Industry group. So a lot of stocks, and it's no secret to you guys out there if you're trading, they move in groups. They go up, they go down as a whole. So if you're looking at a stock, you want to know one, am I buying the leader in the group? So if I'm going to buy a stock in the internet content group, ideally I want to buy the leader. Two, I want to make sure there are other stocks participating. So what are some of the other ones that I could potentially go to? And then our proprietary ratings, if you're not familiar with those, I'd encourage you to go to investors.com, marketsmith.com, how to make money in stocks. These ratings have been time tested for 50 years since we've been in business, and they really help you to make a decision. Very quickly, for example, EPS rating is 99 for Facebook. In our database, based on its earnings history, Facebook is in the 99 percentile, top 1% of all stocks in our database. So that's very easy for me to make a decision. As far as earnings, Facebook is a fantastic company. That EPS rating does that work for you. So there's a lot of other key growth ratings, and you don't want to get bogged down in too many of them, but we provide them there for you if they're important in your analysis. So if you're familiar with how Bill's system has worked, PE is not something that we use, but it might be something that you use, so we provide all those data points for you. Fund ownership. Ideally, you want the funds increasing, right? Number of funds to support your name. And last but not least is the quarterly earnings block with the most recent quarter at the bottom.
Okay, so let's get into step 3 here. So we're finding great ideas. We're able to analyze them quickly using the weekly chart. Now, in the end, you have to figure out where you're going to buy and sell it. Now, the nice thing is, and Scott and I were both customers for years and years. It took both of us years to learn how to read a chart, right? To recognize patterns. Now, with this pattern recognition, you're going to get through that learning curve just with one click of a button. So let's get into it. Now, let's first go over why patterns are so important. Scott talked about this, just mentioned it right now, institutions, right? Institutions are responsible for 70% of the reason why stock goes up, right? There's just so much money out there, and think about these large mutual funds, they're going to take months to build their position just in one stock. And while they're building their positions, the demand for that stock is so high that you start forming these patterns because they're going to quietly do it. And they're just trying to tiptoe, trying to get into their great idea, but these patterns start to form. And so that's what we're looking for. That's why that's the reason why we do all of this. We're trying to figure out what are the huge stocks in demand that institutions have to own. Now, the nice thing, and I hope that you've seen this already, these patterns, once you see them, they're going to perceive these major price moves. Okay, so the more you get familiar with these patterns, the closer you're going to get to getting a good buy in a stock that has that potential. Now, my favorite part is it allows me to manage risk. In the end, it's putting a plan into place. So now when I buy a stock, I know what to do, right? If it goes against me, I know where to cut my losses. If it's in my favor, I know where to take my gains too, okay? So it's highlighting the optimal time to buy and sell. And so let's show a pattern here. No, first, let's go over a few of our patterns, okay? Now, there are a lot of patterns out there, especially in technical analysis, but we focus on just a few of them. Now, the coupled handle, double bottom, flat base, soft with handle, ascending base. There are a couple others, and pattern recognition is going to pick up all of these. And the reason why we do this, remember, we studied history and really going back over 100 years. These are the patterns that were there before the big runs. Okay, so we decided to really, really focus on these patterns and get good at managing the stocks that are coming out of these patterns.
And one thing that Bill says, and patterns and charts are important to us, but one of my favorite things he says, there's a lot of things I like, is the stock's not going to go up because of the chart, right? So it's good that you have the chart setting up, but what we're trying to find is the best companies, the best earnings, the best sales, and then overlay them with one of these chart patterns so we can manage our risk, try to time the purchase much better. And, our database goes back 100 years, and, because people just don't change that much, the patterns are built kind of on human interaction, right? Human emotion. So you'll see a cup with handle on Wright Aeronautical in, 1909.
Exactly. Or the railroads, right?
Railroad.
Northern Pacific had a beautiful cup with handle as it broke out. Yeah, it's crazy, but it repeats over and over again. So let's go and take a look at the pattern recognition. But now, this was not easy, okay? It took over 10 years. But as I mentioned before, when a pattern is recognized, it's instantly drawn on the chart on a daily and weekly basis, okay? And we mentioned our database. For Mark Smith, it goes back to 1963. Now, here's the key point. This is not after the fact, okay? These patterns are being drawn in real time. Remember getting an edge in the market? We want to see these stocks, we want to analyze the stocks before they have a chance of breaking out. Watching the pattern recognition drawn in real time is going to give you that advantage. So here it is. Now, I'm sure all of you out there are familiar with the plan your trade, trade your plan, right? This is that in action right here. This is planning your trade. Now let's first trace the cup with the handle, okay? If you look over the left-hand side at the 224.15 area, that's the top of your cup, okay? Now you scroll down and you right down to the 185.69, that's the bottom of your cup, and you go up to the 218 area, that's your full cup right there. Now the handle starts and at 218 and goes down to 201.18, okay? So there's your handle. Now the dotted line running across from the 218, that's the pivot, okay? So as the stock emerges from that dotted line, it goes above that dotted line, that's where we're going to consider buying the stock, okay? Now, we're identifying that area, 0 to 5%. That's usually where we're going to keep our buys around with that blue shaded area. So we just put it out there right for you. Now, obviously, not all stocks are going to work as well as a Panera, okay? There are plenty of stocks that are going to fail. So we put a little pink area, 5 to 8% below the pivot to let us know that, hey, something's wrong here. You want to consider cutting your losses. Now, if the stock works in your favor, a lot of times when I'm up 20% on a stock, last thing I want to do is sell the stock, right? I'm feeling a genius at this point. But we're going to keep everyone honest, and we put a green area up there reminding you that, hey, a lot of times it's good to take at least something off the table when things are working so well for you. So it's all, your whole trading plan is right there on the screen. We're doing all of that work for you. Now, for those of you who really want to start studying this more and more, you'll quickly find out that there are a good couple of handles and not a couple of handles that are a little bit weaker. Whenever you put your mouse over the pattern, we're going to give you some of those essential details. We're going to tell you what stage it's in, okay? If you don't know what stage counting is, we've done webinars on that in Market Smith where you can go and learn about that. We'll tell you how long the base is, how deep it is, how deep is the handle, okay? So we're giving all of that. Now, when it breaks out, how strong was the price move, the volume, that's all done, right, once you put the mouse over there. So you're getting all that analysis instantly.
So let's kind of put this in action. What we did is we went back in 2016. We talked about NVIDIA being one of the best stocks of 2016. We went back and said, okay, a lot of us missed Market Smith, or a lot of us missed NVIDIA or caught just a portion of it. If we were a Market Smith subscriber, what screens did it appear on? So let's start with the beginning. So this is the chart we talked about. Market Smith, our NVIDIA was up 260% in 45 weeks. But where did it start? It started way down here, and that's where we're going to start our animation.
So here's the cup being formed, and one of the cool things that it does, like Arusha mentioned, is it starts to build the pattern in real time. So it's a potential cup. Keep that in mind. If the stock breaks down or builds a different pattern, the algorithm will change. It's flexible in that regard. But at this point in time, it says, hey, this is starting to look like a cup, draws it for you, lets you know that you've got the potential for a buy point up there at 33 and change.
Now, the first indicator that we started seeing NVIDIA come through, or the first list, is the earnings gap. Okay, they reported earnings, they excited Wall Street, stock jumps. Okay, now remember, just to set this all up, this is back in February. We're at market lows at this point. The Nasdaq just undercut. And so it's extremely scary at this time. No one wants to ever buy a stock again. But here's NVIDIA fighting the trend and doing something that's exciting Wall Street.
And then the pattern is starting to develop a little bit more. You've got your cup. And if you missed the earnings gap, one of the things you should be doing, one of my favorites, or the absolute favorite, to be honest with you, in a market correction, is screening for RS line new high. So what stocks are resisting the market? What stocks don't want to go down? And there's NVIDIA. So even though the stock is not a new high, the relative strength line is.
Now remind us what the blue dot is, Scott.
So it's telling us that the RS line is the new high, 52-week high in essence on this daily chart.
So compared to the S&P 500, this stock is outperforming what it's done previously and hitting a new high relative to the strength of the S&P.
Once you get it, it's easy to understand. But conceptually, in the beginning, it's hard to figure. The stock's not at new high. How can it be higher, right? How can the RS line be higher? You know, because the S&P has gone down a lot. So if you think about if you own a stock at 100 and the S&P is at 100, just to make it easy, and the S&P goes down to 90 and your stock goes down to 95, well, your stock went down, but relative to the market, it went down a lot less. You're much better off being in that stock than you would have been in the S&P, and that's what that line is measuring.
Now it starts to form a handle. So notice, before you just started seeing the cup, now the handle's forming, and it starts to appear on the near pivot list. So those are 3 ways already that NVIDIA is just starting to come up on your radar. Hey, take a look at this stock. Take a look at this stock. Remember, the stock hasn't broken out yet, right? So look how much further ahead you have had a chance to start doing some research on NVIDIA.
And one thing you didn't mention, and I'll mention, is the new pattern, right? So now the pattern says, oh, wait, this isn't a cup anymore. It's a handle. It's built a little correction. So now breaking out today is the 4th one. So you can see how if you missed NVIDIA a couple of times, you kind of get, you just keep getting this idea pushed to you, and the really great ones will get pushed to you numerous times, and the stock is breaking out today on this day.
And by the time NVIDIA broke out for the first time, Mark Smith had alerted you 4 different times about how powerful the stock was.
Now, the stock immediately starts taking off, runs up in 22 days, it's up 12%. And, the market's taking off too. That's exactly what happens for those stocks that are the first out of the gate. And so you're thinking about that, and now you missed it, but guess what? A lot of the best stocks, they can give you multiple chances too. Okay, a little bit later comes through the pullback screen. So on the 50-day, here's another opportunity to buy the stock. Remember, it should hold here if it's really that good a stock.
Boy, it held really well. And then we've talked about the earnings gap report, obviously, before, but here it is. Stock gapping up on earnings, and earnings nowadays are a huge catalyst both ways, right, up and down. But obviously, in this case, we're looking for catalysts to the upside, and NVIDIA reports another great earnings quarter, and the stock's up, 20% that day or something crazy, 15% that day.
On the earnings bar, there's an orange balloon. What does that represent?
Well, what this is saying is this is the highest volume since the first stage base. So the first stage base is back in the 20s, okay? And so it's giving that little indicator, another proprietary indicator that we're using to say, hey, this is really, really significant volume. Now, the other thing is that it's 52 million shares traded. The other earnings gap was 26, now 52. That's not us buying. Maybe it's Jonathan buying, but it's not us buying the stock. This is a Fidelity needing a lot more shares. They need another 1 million shares of an NVIDIA to keep building their position.
The institutions aren't as price sensitive as us guys are, right? So when I pay 40, I don't want it to go to 39.75. I would just never go below 40. That's what I'm looking for. They are buying thinking 3-5 years out, and so in this case, if the stock is 38, 39, 40, 41, 42, it's irrelevant. They just got their trader on the bid, buy, and they might think the stock is cheap here. And in essence, it turned out to be super cheap.
Yeah,
look how cheap NVIDIA was, right in a new high, up 15%.
Yeah, how many people would jump on NVIDIA to buy NVIDIA at 40 right now?
Because the analysts, these mutual funds, these institutions that have analysts, this earnings report was really powerful. The earnings were starting to accelerate. And before, when the stock was 30, they might have said, this is a $60 stock, and so they're trying to buy it in the 30s. And now, based on this new information, this isn't a $60 stock. This is a $120 stock, the analyst is trying to say. So the fund manager is saying, well, what does it matter if I pay 40 or 45 or 50? And that's how they trend, right?
Okay, so let's go to the weekly chart. And so this is after the earnings gap right here. So just get a good look at that visual. And here, once again, look at the weekly bar. You get that little balloon right there, the teardrop. That bar right there, institutions falling over themselves.
This great
get more
stock market paradox, right? From Bill's book. What seems too high goes higher, right?
Exactly.
And then it goes tight. And tightness, if you're unfamiliar with the term, is basically if a stock changes on a weekly basis in a tight range of 1.5%. So all the closes 3 or 4 weeks are right around the same price. And ideally, the stock doesn't make a lot of progress, both up or down, and you got to have that look here with NVIDIA. So what's going on here? The stock's gone from 30 to roughly 45. It's up 50%, and there's very little activity, right? So the institutions have backed off. They're trying not to buy too much. They don't want to jam their average cost up too much on them, but they have very little interest in selling. Yeah. So the stock is in strong hands. And that tightness represents that. And it's a great place, if you caught the stock right, it's a great place to add to the stock. It's a little trickier to initiate, but I would say for the very good ones, the really good ones, it's probably worth the risk reward. The downside, 7-8%. The upside, if you get a really good one, is much larger, obviously.
And 3 weeks tight wasn't one of the 8 we covered at the beginning in stock selection, but there are many, many different reports available in MarkSmith. And 3 weeks tight is just another one available to our customers.
Now the stock emerges out of that 3 weeks tight pattern and starts to go higher, and it goes a lot higher. Now you're currently up 91% in 22 weeks. So at this point, you're like, oh gosh, I missed the stock, right? It's never going to ever going to give me another buy point. But guess what? Even the great stocks, they all need to take a break. And so here are 3 other chances to get into NVIDIA, right? First, it appears, pulls back to the 10-week line, and pulls back there, gives you a chance to buy off the 10-week line. Near pivot, remember, it's forming the base in real time, starts to pick up that flat base, RS line, new high report. So it just keeps giving you chances. Hey, take a look at it, consider it again. And so that's really the power of just having all these algorithms running through our database and just using all this technology. It just makes all of our lives that much easier, so we can really focus on analyzing the stocks and deciding whether to buy it or not. The MarkSmith's going to do all that work for you to find those ideas, and all you have to do is just analyze it.
So this week, we thought we had missed the stock entirely, and this week alone, MarkSmith gave us 3 opportunities, or 3 flags to say, you can safely buy here, you can safely buy here, you can safely buy here.
All right, and then it emerges from the base, right? So the minimum base that we have is 5 weeks long. So this is a 5-week flat base, and the stock breaks out. So this is we're up all the way up to number 11. So if you missed NVIDIA, it wasn't for a lack of effort on our part.
And of course, here's number 12, another earnings gap. I mean, I wish all my stocks did this. Just earnings gap, it just keeps moving higher and higher. But this is a great stock to study. Even if you didn't get it, it's a great one to go and look back, because this is true institutional accumulation during this whole run, and go back and look at the story. What are they in? What were they doing before this huge run? What excited Wall Street about this story? And there you go, 260% in 45 weeks. Obviously, probably the best stock of 2016. This is the one that we're definitely, studying over and over again to just try to get more and more clues.
Yeah, I mean, there probably was a stock out there that went up more than NVIDIA, something esoteric. But in our world, when we're trying to buy institutional quality earnings and sales, I would say it's pretty cut.
Well, I mean, for quality kind of companies, quality kind of stocks that you can feel safe putting a larger amount of money in.
Put a lot of money in, and you can, let it breathe a little bit.
All right, for those who want to take advantage of the powerful tool MarkSmith, and we only showed you a portion of the tools and of the platform that's available to you with MarkSmith. If you want to take a 4-week trial of the product, it's $29.95. For $29.95, you're going to save over $120 over the sticker price. Go to investors.com/MS4weeks. That's investors.com/MS4weeks. And we are here to help you. We are here to support you. Guys, talk about the product coaching.
So there's a handful of us in-house here, and I mentioned it earlier. We all are in this together. We're trading our own accounts or company money for some of us, and so we know what it's like out there, both good and bad. So we'll help you to guide you to use MarkSmith. All right, so it is a key. We're not licensed, so we're not, brokers giving advice. We think you should buy X, Y, Z, but we definitely have a lot of experience in the markets, and as well as definitely using the tool. So to get you through the learning curve, we're here for you as far as coaching, whether it's one-on-one coaching over the phone, webinars, videos, just however you learn best. We've got the platform for you.
Like we said, Mark Smith is a very robust tool. We have a lot of ongoing education. The gentleman talked today about reference a couple of the previous webcasts they've done. It's a very robust tool that's got a lot of different features, but we walk you through them. There are, how many different webcasts do we have archived?
Probably over 100, I would guess.
Yeah.
We've been doing this for 7 years. No, for the webinars, on a week-to-week basis. So, yeah, probably over 100.
Every Tuesday we do a live one. If you can't make it, we archive it, and it's available to watch, at your convenience.
So go ahead and take advantage of the opportunity. You get a free product coaching. Like we said, it's a relatively complicated product because it does so much. It's not a 1, 2, 3, here are 3 stocks to buy. It mines the entire database. It's going to draw patterns on every chart in the database. It's going to give you screens on every chart in the database. And let a coach help you. So go ahead and go to investors.com/MS4weeks and take a trial of Mark Smith for only $29.95. Let's look into some Q&A. Adam, do you guys have any questions out there?
Yeah, we do. Tony wanted you to post a link, which you just did, so that was good. Richard wants to know if you're going to have a recording of this presentation, and the answer is yes. John wants to know, can we plug in our own indicators on these charts?
There's your own indicators? No, you can't plug in your own indicators with markets. One of the goals, the markets are complicated enough, and one of really the goals here in-house is to keep everything as simple as possible. And so these charts that we've been using, they've been being used here for probably 50 years or so, or some kind of version of this chart. So we keep it very simple intentionally so we can focus on the price and volume action.
That's all I want to say. Yeah.
Awesome. Okay, so that's really helpful. Anam wants to know, when's the right time to buy and sell stocks after how properly right stocks selected? It's a little tough to answer.
We have several Mark Smith coaches answering questions live throughout. So if you've been texting questions throughout, they've been answering you live. And give us a call. Once you subscribe, we're open 5 days a week, 12 hours a day. Give us a call. We'll be happy to help you out and answer questions. So we want to thank you for the time. We want to thank Adam for the opportunity to speak to his audience and demonstrate the power of our product. Thank you for your time, everyone.
Thanks, guys, for doing it. And that's a great price, $29.95. A lot of stuff in our industry costs more. My stuff costs more. So $29.95 is a low barrier to entry where people could really come and experience that. And that's what we could expect from a group like you guys. So I hope everyone enjoyed that. Thank you so much, everyone. Really appreciate it. And we'll make sure anyone who got there late gets a recording. Be good. Thank you.
Thank you.